Hello and welcome to Moving Iron Podcast Markets. This edition of the Moving Iron Podcast is brought to you by DawsonTire and Wheel, your premier ag tire and wheel provider in North America, helping people grow. Dry shod boots, the official work boot of the Moving Iron Podcast, and TractorZoom, delivering insights. Man, if I can't talk and machinery is not working today, Shawn, I don't know what we're going to be able to do. So my guess
we'll
is
try our
usual.
best.
My guess as usual on Thursdays is Shawn Hackett with Hackett Financial out of Boca Raton, Florida. And Shawn's a wealth of knowledge, and I really appreciate the fact that he's on the podcast every week to talk about what's going on in the markets as well as what's happening out there with the economy as a whole. So, Shawn, how you been, man?
Pretty good. I'm enjoying some of this rise in price we've finally been seeing that's gotten some momentum, that's finally gotten prices at least somewhat respectable in certain markets. So that's good to see.
I sure am enjoying it. So
yeah.
I guess as you take a look around right now, one of the biggest things I see happening, and of course the Chinese are never going to tell you what's going on or it's not going on, but we've talked about it at length on here about the Yangtze River, Three Gorges Dam flood area and what that looks like. And right now a giant bulk, even if it's not in a flood area, just the rains themselves have really devastated the crops in China, and they are at the table right now buying a lot of stuff. There looks like they're going to have a pretty big corn shortage. So the amount of corn that they're going to have to buy from someone, which right now it's us, is going to be a rather large amount. So let's talk about what effect you see that on the market here in the rest of this week and the coming week.
Well, remember, Casey, they've never really been a big corn importer. I mean, they've just, they just never been. Every once in a while they buy a little bit, but I mean, they're going to have to come in for some big numbers from the corn shortage that they currently have. And the corn shortage is developed because they chop through a lot of the lower quality corn to make ethanol. And then, of course, they've been having some poor crops. Of course, they never admitted they had bad crops. It was always good.
They had an increase in rice production. So,
but eventually it catches up with you. Reality catches up, and so they continue to have these sky high prices in China. Of course, the flooding causes greater food scarcity there and panic there. The other thing that's just starting to happen, I mean, they're not having a very good year, Casey, and they had a big time typhoon go up into the Northeast grain belt. That's where they produce most of the corn, for example. It created flooding rains, and there's a second storm that's going up there now, going almost in exactly the same place in the Northeast China plain where they grow most of the corn. And it's going to create even additional flooding. And of course, they're trying to harvest the crop now, Casey.
Right.
So, my goodness, they just, this is you're getting flooding at an absolutely horrendous time for them. So they're in really, really big trouble on corn. Not to mention that there was an indication a week ago that the fall armyworm has been found everywhere in the Northeast China plains for the first time ever. So who knows how much damage those little critters have done already. So we look at the corn market. We just think they are going to be in this market buying big from us, from the Brazilians, from the Ukraine, everyone. They're just going to be a big buyer of corn, and that's going to put a bid in the corn market. Any correction that we may see, it's probably going to be more shallow in nature because they're just going to be there being big buyers in the market. And of course, what that means also is the global ending stocks are going to continue to fall, Casey, because this demand is being underestimated, right? So that feeds into this picture of 21-22, major La Nina, major weather problems, major additional crop problems. So it's feeding into this corn scarcity concept that we've been talking about developing, and it's happening here and now, and the Chinese are the first one to really feel it,
Yeah, and they've felt it in a million different ways, man. They can't win for losing it right now. It looks like from everything from the African swine fever, which you don't hear much about. Right now, but quite frankly, it's not gone away. They still have the same issues that they're having. It might be under a little better control than it was, but it's still a widespread problem in China. So their thirst for proteins imports are growing even still this day. We're seeing that in the hog market, seeing that with beef. So talk about those two markets a little bit and see what you see happening there.
Well, we've been a little worried about beef short term. We thought the market kind of got a little ahead of itself. It is a high priced item. And as much as the stock market seems to indicate all as well, we do know there's a price point that a lot of budgets that are strained are going to pull back buying expensive beef. And so we've been getting a correction in beef price in cattle prices here a little bit as well. But the hog market is breaking out. If you look at the October contract, I believe we've made a new, we've broken out of this this base that we've been in and starting to head higher. And this is a market that we've continued to suggest that we were finally going to get this this overbearing supply that's been keeping the market depressed. We were finally going to get demand to overcome that, and it's starting to show up. So we think pork is very cheap relative to beef, and
goodness,
bless you.
Thank you.
And so we think the pork market, is kind of playing a little catch up to what the cattle market did. And once again, as much as the Chinese are rebuilding their hog herd, that's not really going to translate into greater domestic supply there until very late in 21. So in the meantime, they still have this huge protein gap that they have to fill, and they're buying every bit of pork they can find anywhere. And what the good news is that finally, between lower farrowings and euthanizations that took place post-pandemic, the U.S. supply side is finally coming into wraps, just as this demand continues to push ahead. So the hog market continues to look favorable. And if we're in the hog producing business and we're thinking about making cash sales, we think we'd still be patient here, Casey. We think, we don't think it's quite time to lay in some cash sales yet, at least on the hog side. We think being patient right now and letting this market fulfill some of this upside that we've been talking about would be worth doing at this point. So
yeah, it's been it has been a topsy-turvy deal, man. The cattle market's got a lot of volatility in it here of late, and they'll run up one day and run down the next, and there's a lot of intraday volatility. But like you said, the hog market is one of those ones where you can tell by the volatility that it's getting ready to take off, that there's going to be some massive changes. Typically when you see that, it's up or down one way coming for sure, but it really feels like that hog market's going to get their shot to do something other than lose money. So hopefully, knock on wood, that'll take care of itself. All right, so one other thing we talk about here once in a while, and we've kind of talked about it a little bit, and a lot of it has to do with the desert locust and what we see happening in that area. And right now we're digging sugar beets here in early sugar beet dig here in western Nebraska. So the sugar market is something that we're paying attention to with what's happened in India, and as well as what we see starting to kind of creep into China a little bit, the desert locust and the effects that would have on sugarcane and rice and those kind of things. Where do you see sugar doing? I mean, is it there for a while? It was pretty strong. What's your thoughts on
Well, I got the initial rally on the rally in crude oil and the idea that ethanol in Brazil is going to improve, and there's going to be more switching to some ethanol down there. And so we kind of got that rally out of the way. But to get beyond that rally, we're going to need to see Indian sugar production, come under pressure. And they've had good rains this year in the monsoon, as they typically do as we move it. Our dryness is their wetness, just as an example. La Nina is very wet for India, where it's very dry for us. So they've had plenty of rain, but the issue is there's still a good 30 days to go before one can get a true concept of what yield's going to look like. And the report from FAO, I believe it was yesterday, on the desert locust are showing that there's been a significant hatching and buildup of hatchings of these desert locusts in that west quadrant, Gujarat, and that northeast quadrant. And so, they put a warning flag, that they're watching to see if that's going to start to create swarms and migrate, because the sugar areas are just to the east and just to the south of that northwest quadrant. So that really would take this market off to the upside. If we start seeing pictures, these desert locusts swarming all over these sugarcane fields and eating it up like we've seen in Africa, that would be something to take this market out of from where it is and move it to the next level. And so the next 30 days, there's no way to know for sure, Casey, if that will in fact happen, other than to say the potential is there for that to happen, according to the latest update from yesterday. And so that's something to pay attention to. If we don't get that, the sugar market's probably going to continue just to kind of, I think, base sideways back and forth until they can eat through some of this Indian supply that will be harvested if the desert locust somehow doesn't become as much of a problem as it may be. So,
yep. All right, so the other side of that is China's, again, keep talking about China, but as you take a look at the soybean market, again, soybean meal is a big thing. The Chinese are rapidly trying to rebuild their hog herds and get things back going again. And in order to do that, they need to have lots of feed. The last two, I don't have it up in front of me here yet, but the last two export reports that come out every Thursday are had our soybean exports very high. In the million, like 1.5 to 2 million metric tons of soybean exports. What are your thoughts on soybeans, and where do you think? How do you think that's going to play out today?
well, the good news is they're finally buying a lot of soybeans like they used to.
Right.
We got used to they just didn't buy them anymore. Now now they're buying like they used to. And of course, it's happened when we're getting greater concern over U.S. crops. When we thought the crop was made in early August, and all of a sudden, a lot of this dryness in the West, a lot of the heat came in, and now there's concern about maybe the yields coming down some in the September 11 USDA report, and how much are they coming down? And the Chinese, they're not. They watch the weather too, and they're saying, well, wait a minute, if the U.S. is going to have a smaller crop, maybe we need to get a little, maybe we need to be a little more aggressive here in case that crop comes in smaller than we think. Don't forget the two areas of flooding, the Yangtze River Valley in the south, they grow a lot of soybeans, half of them, and in the northeast China Plains, they grow the other half. Both are underwater. So they can't be liking the prospects for their soybean crop this year, even though they don't produce a lot of soybeans, like they do corn or wheat or rice. Nonetheless, it's supply that they count on. And if they don't have it, or they have a reduced production, they just have to buy that much more. So I think a combination of worrying about our production being less than they thought, and then of course their own production being down, is really brought them to the table to be, pretty big buyers. And the key question is, will they take it even up another notch? Will they go to where they are now, which is what they historically used to do? And will they take it up another notch? And that really will be the key as to whether soybeans can clear this $9.5 to $10 resistance area that's held this market back for years. Or is that going to hold it back for now? We're going to have some harvest pressure into October. That to me is really, like sugar, we talked about watching the desert locust next 30 days, those weekly export reports to China are going to be the key. Are they staying level, or are they still escalating those purchases? Time will tell. So
yeah, so I've got up my the Pro Farmer report here in the morning, and they have the estimates here for corn for the Thursday export report, and this is the first time I've seen numbers this big. So they've got, last week it was 270,000 metric tons, and today they are estimating somewhere between 1.5 and 2.5 million metric tons. So that was what the estimate was last week, was 270,000, and last week shipments out were 1.1 million metric tons. So they are expecting a lot of growth in the corn export market as well as the soybean export market. They're right there within that same range. So they're coming to the table to buy quite a bit of stuff.
I believe you'd have to go back, Casey. I don't quote me on this, but I believe you'd have to go back to 2010 to see exports like this for corn. I think you'd have to go back that far to see these kinds of export numbers. I mean, it's been a long time that we've been chopping through corn like this on exports. It's been a long, long time. It's good to see corn got stupid cheap. As you know, we talked about how cheap it was. Low prices always take care of low prices. I know it's a catchphrase that everybody says, but it's true. And these kind of exports, though, they continue for much longer. I mean, the USDA is just way too low. They're way too low. And that means those carryouts going to continue to come down. We've talked for a long time on your program that the 182 yield on corn that they came out with in August was fantasy. That we're looking at something in low to mid 170s. And, now I see all the analysts talking. I think FC Stone said 2 days ago, 175 now.
Yeah.
Everyone's dropping their yields. They're dropping, I don't know. Also, in 2 weeks, everything's changed. So bottom line is the world's starting to come down to the idea that high heat, against spotty moisture is not going to produce the 182 yield that somehow everyone believed was already baked in the cake. But you heard it here first, folks.
Basic agronomics or basic agronomy.
Yeah.
High heat, low water doesn't necessarily produce a bumper crop.
So then the next question is, how quickly is the USDA willing to admit this? Right? The USDA loves to piece it out. They probably won't drop yields as much as maybe a lot of people are expecting, just because of their methodical approach, and they like to go little by little. They don't like to make a big stand on a particular month. So we have to be prepared that there could be a disappointment on this report. Even though they'll knock the yields down, it may not be down as much as many are thinking. So there could be a little whipsaw here. I just kind of, my idea is that they're not going to get to the final number in September. It may take until the October-November report to get to the final correct number. So we need to be a little wary that there might be some kind of a buy the rumor, sell the news on this, short-term trading on this USDA report. It doesn't change the fact that we think we're going higher later, but it could cause some downside whipsaw if the short-term traders are disappointed.
Absolutely. Yep. So lots of opportunity out there. And honestly, there's the one thing I don't want to see in the corn market is this rapid run up to what you saw where we got to 450 last year, 460 last year. And then there was just every day was limit down till we got to $3.02. It seemed like, so it was, I would just want to see that steady kind of, I'd love to see $4 corn.
Well, we want to keep this demand going, Casey. We want to keep chopping through this corn. We want to keep developing the market. We want a really good longer-term multi-year bull market is not one that spikes straight up, as you know. They kind of meander higher. They higher highs, higher lows, keeps the market going, doesn't crush demand. I agree with you. I think the best picture for farmers is, of course they want $5 corn now and sell it all, but the health of the market would be to kind of meander up to 4 at the end of the year, keep the market healthy. We're going to have a spike trade at some point in 21, 22 with the weather we've been talking about, but it would be better to let the market chop to as much corn as we can. So when we get to that moment of truth, there's very, very little to hold the market back. And then we get the really big price that farmers can do something exciting with. And so I agree with you. A meandering move to 4 in the fourth quarter would be a really healthy sign for the market to keep things going. So,
yep. All right, let's talk about cotton real quick, and before we shut things down. But cotton has had some very good rallies here of late. You've seen some pretty good moves up, but you've also seen some pretty decent moves down as well at the same time. But there is that volatility there that is ratcheting the price of cotton up ever so gently, coming out of the coronavirus stir and what we saw with the economy as well. So and cotton is that one of those indicators that does show what the overall health of the economy is right now, and it is moving upward. So talk about cotton, what you see happening there.
I'm a little concerned about cotton. So for corn and soybeans, we know that we're pretty much the cheapest game in town, right? We have the best price in town, and so we're getting a lot of business. The problem with cotton is we're trading 10 cents over international price, 10 cents over Indian price. So we're at a premium, and U.S. quality is a little better, and so there's always a little premium, but 10 cents is excessive. And the Chinese don't really, according to us, don't really need the cotton. We think they're doing a lot of purchases more so just because of the phase 1 trade deal than because they really need it. Corn and soybeans, we believe they actually need the product. It's a need thing, not we have to because we were told to do it sort of thing. So I'm kind of worried a little bit, as much as the economy has been rebounding and we're getting this relief rally money printing and government spending. I'm really worried what happens after the elections are over, Casey, and I'm wondering if the government doesn't pull back on some of this stimulus and pull the reins in a little bit. And of course, as you know, cotton is one of the most economically sensitive, cyclically sensitive commodities. Most of the other commodities are a little more resistant. So we're kind of worried about this, mid upper 60s area, and thinking that we might be potentially making a top here for a while. And so if I was a producer, in Texas or deep south in the U.S. and I'm looking at everything, I think I'd be making some sales. Harvest is going to start soon. Down seasonals begin end of September. A lot of things to say that I think I'd be booking some cash sales here, Casey. I'm a little worried about the cotton market right now, unless a hurricane comes, flooding into Texas, the key Texas areas or the deep south areas, which the last one missed. Of course, that's still a potential, but I don't think I would bet the farm on it. I think I would, get something on the books, but keep some powder dry in case a hurricane causes a final spike higher.
Yep. Good stuff, Shawn. If folks want to reach out to you, get some information about what it is that you do at Hackett Financial and the stuff you have out there, what's the best way to do that?
Our website is Hackett, Hackett, advisors.com. Lots of sample reports and things they can watch to see if what we do might be of value to your listeners.
Right on. Well, thanks, Shawn. I appreciate you being on the podcast. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. And now I go live on my YouTube channel every morning with Shawn, and as well as Chip Nellinger when we do the market stuff. Also, check out the Global Ag Network, the great podcasters out there, and also go to movingironllc.com for the latest information about the Moving Iron Summit that is going to be January 20 through 22 in Nashville, Tennessee, at the Renaissance Hotel downtown. Check that out for the latest information. If you are a dealer of any kind and you'd like to come to that, make sure you reach out to me and I will get you the information for that. Also, check out all the great news there on Shawn's website. Like you said, it's HackettAdvisors.com. There's a great information there, a lot of sample reports you can check out. If you get a chance to get those reports, make sure you read them because there's tons of information in them. So with that, I am Casey Seymour with Shawn Hackett. Let's go move smart, folks.